Hey everyone, and welcome back. What I'm going to show you today is how we literally see buy and sell orders sitting in the order book in real time, overlaid on the chart. Now, it might look a little busy and intimidating, but there's nothing to be afraid of. If you look at it enough times, you will figure it out. I guarantee you that. So, what is the liquidity heat map? The liquidity heat map is a visual record of liquidity within the order book. It's updated in real time, of course, and it shows you the current liquidity of the market. Liquidity is extremely important for the market, for any market to move. It visualizes the distribution and density of buy and sell orders, okay? So buy orders in the form of limit orders across all price levels. Okay, so across every single price level, you see all of these limit orders where participants have placed and they're waiting for it to be filled. So the intensity of the color across the heat map will tell you the size, more or less, of the clusters of orders sitting at that price level. Meaning here, there's a lot of orders sitting at this area, or was, because it's now been run through by price. Same thing here. There's a lot of orders sitting here, okay? So in this case, the brighter the yellow, the bigger the order. So you get bright colors for large orders, and you get darker colors for smaller orders. A lot of times you'll hear me using the word walls, and what I'm talking about is these dense cluster, okay, of limit orders that are grouped into price levels. Now, usually on any of these platforms, you've got a scale you can adjust. You can slide it up like so. So you can see basically the big walls. I like to keep it where I only see the majority clusters. So that works for me. But again, play around and see size of clusters you would like to see in your liquidity heat map. Now, quick clarification, the liquidity heat map is not to be confused with the liquidation heat map, which is a completely different thing. The liquidity heat map, which is what we're covering today, shows you in real time resting limit orders in the order book, actual buy and sell sitting at different prices right now. Now, keep in mind that those buy and sell orders could be buy and sell orders that have been placed waiting to be filled and stop losses that are also waiting to be filled. Now, that is a very important concept to take away. The liquidity heat map is also going to show you the stop losses, okay, for orders that are waiting above and below price. Just so that you know, because all of those stop losses are sitting above and below price in the liquidity heat map, it is one of the reasons why price is most attracted to those areas. You'll often hear that when price reaches these liquidity clusters, okay, where there are limit orders and stop losses, price, it can trigger a cascade of stops which creates the volume that whales use to fill their positions. Now, the liquidation heat map, on the other hand, and I'll show you exactly, okay, what it is. We have liquidation map. There we go. So this is your liquidation heat map. Now we have liquidation levels, liquidation heat map, all kinds of different ways to see liquidation. Now the liquidation heat map is a completely different tool. The liquidation heat map will predict where traders using leverage could get their positions closed or liquidated. Now back to the liquidity heat map and where money is actually sitting. So why do we use the liquidity heat map? Well, these liquidity clusters act as a magnet, okay, for price. Big players, institutions, whales, you name it. They need liquidity to actually fill their orders. They cannot just go to the market and buy $5 million or $10 million worth of Bitcoin without passive slippage. And slippage, by the way, is the price you think you're going to get and the price you actually get your orders filled, the price you actually get. Okay, so what do these big players need? Well, they need dense areas, okay, of liquidity, i.e. liquidity pools, where there's enough resting orders to absorb their size without significant slippage. So the liquidity heat map is showing you where the money is sitting, where all these stop losses are, where all these other orders, okay, are waiting to get filled. And think about it, if money is sitting at a certain level, Don't you think price will be attracted to that area? Maybe not in a single straight line. I was expecting this area to get taken out a while ago, but it didn't get taken out. It is a defended area. But now price came back, and I'll be surprised if it doesn't push through to the downside, especially with the news catalyst of no deal with the US and Iran talks, right? Another thing I'd like to talk about is spoofing. So what is spoofing? Well, spoofing is when the wall isn't real. Now that I've zoomed in, watch for walls appearing and disappearing. Sometimes you'll see big walls show up, and when price gets close to it, they'll pull the orders, the limit orders, and that is called spoofing. So if you watch here in just in this area, you'll see a lot of, new lines or new walls come up and pulled and come up and pulled. Spoofing is when a trader places a large limit order on the book with no intentions, dishonest intention of getting it filled. And they do that because they want to create the illusion of supply and demand at certain price points to trick you and me, other traders, into reacting. As you can see here, this wall keeps appearing and disappearing, appearing and disappearing. Keep in mind that orders will be added to the books and taken off. It doesn't necessarily mean that every time you see a wall appear and disappear that it's spoofing. But what you can look for is a massive wall. It looks like basically there's huge interest and traders would start positioning themselves around it. Okay, they'll start putting more orders around it, but the second price gets close to the order, it gets pulled. You have to be cautious, like with any other indicator, how you use the liquidity heat map, because there's a lot of shady things that goes in there. Speaking of shady things, it's actually illegal in the traditional markets, but in crypto, it happens all the time, unfortunately. Price is attracted to where liquidity sits to avoid different things, including slippage. And speaking of slippage, if you're trading leverage, slippage can definitely eat into your profits. It definitely ate into mine. Bad fill can definitely take away your profits. That is why I recommend BitMEX. They have an excellent slippage protection feature that helps you avoid getting filled at worse prices than expected. It's fairly new, so I'm very happy about that because it tells me that they're ahead of the game, which is exactly why I've been using them. Link in the description if you guys are interested, and you also get $50 free. Now let me walk you through the key reads that I use on the liquidity heat map. Now the bright bands above price, that's where sell orders are stacked, okay? Buy side liquidity. And price, of course, gets pulled to that area. The bright bands below price, same thing, buy order stacked. Okay, so a lot of buy orders appear. Sell orders underneath here are buy orders that are stacked. And this is sell side liquidity. And on these sides, we can expect downside sweeps into these zones, meaning liquidity sweeps grab all of those stop losses, all of those limit orders, so in that liquidity pool at the bottom or on the top, liquidity sweep would stop you out, grab some new orders to, continue up or down. So we pay attention to levels that get defended, for example, here. Now, what I do in order to verify that these orders were not spoofing and they were actually real is I combine the liquidity heat map with the footprint and delta. I never trade off the heat map alone. I always confirm with the footprint chart. So the heat map will show you what's on the book. Okay, so it'll show you all these orders. However, the footprint chart will show you actual orders that got executed. These are not limit orders on the footprint charts. They are executed orders. You cannot fake a footprint chart. You cannot create a fake executed order, because as soon as it gets executed, it will go to the footprint chart. So what is the footprint and delta? Well, the delta is what you see in the footprint chart, and the footprint will give me only executed orders. So what I'll do now is I'll go and I'll turn on my footprint chart over here. Okay. And now I'll see if there was any large executed orders. We don't know if those limit orders were pulled or if it was executed. So what we can do is we can go over here at 76.75, okay, 76.75 on this candle, 76.75, and this was 76, 6, because there are clusters right there, and it looks like here was executed. What can happen now is there can be a cascade of stop losses being triggered, which will move the price down, which will create a snowball effect and take price lower down. Another thing I would look at with the footprint chart is if price sweeps into a liquidity cluster and I see a huge delta but no follow through. Now we're on the 15-minute time frame, so it's too soon for me to say whether there's a follow through or not, but price just swept basically this entire area. So what I want to look at now is to see if there is continuation. Okay, will price go further and sweep this area here? Okay, or will price reverse? And for that, I'll look at absorption to help me figure out what price wants to do. To see absorption, I'll simply look at the delta. And the delta on the footprint chart is the buy minus the sell will give you the delta. Positive delta was more buying, so there's positive delta. Negative delta, okay, is more selling, so we see negative delta. Now I'll look at the delta at any of these key liquidity clusters, okay, and if it's being absorbed like it was the last time there was that huge wall, okay, a few days ago, if I see there's a lot of negative delta but price is not pushing down, so if I see that there's a lot of effort but there is no result, then I'll say, well, you know what? It looks like there's an absorption. And the same thing on the opposite direction. If I see there's a lot of buy, but price is not going up, well, then there is a lot of passive sellers. So that means that they're absorbing, okay, the buys and they're keeping price down. That means that there is absorption. So I'll try to make my decisions based on that. But first, looking at price, making sure that I have my market breakout structure, that I have my gap, and so on at a key level. So here I have a large amount of negative delta, large amount of negative delta, large amount of negative delta, but price is being defended, as you can see. Okay, it is not dropping further for now. As you can see here, orders continue to be entered in the book and pulled out of the book. So yeah, those are just limit orders with, maybe even participants putting their orders in and moving their stop losses, right? If you move your stop loss from 71.016 to, let's say, up here, then yeah, your order will get moved, right? So all of these orders that have been placed, okay, goes into the order book as limit orders, and when it's executed, then we see. So key takeaway here is orders on the liquidity heat map can be faked. However, executed volume cannot. And that's why you use the liquidity heat map and the footprint chart combined. So guys, I hope this helped you. If it did, hit like, subscribe. Thank you for watching and see you in the next one. Bye-bye.